Welcome back. DeFi certainly has many potential advantages, and it can reshape how our digital economy might work as a whole. But there are also a lot of risks and uncertainties, which is, I would say, rather normal in such a nascent and young environment. So let's dive into some of them. DeFi is certainly a victim to many security attacks and hacks. So we have seen that in 2021, over 800 million US dollar were stolen in about 87 DeFi attacks, just looking at the Ethereum and the Binance smart chain. And the reason why security is so hard is that it's a multi-layer issue. It's kind of like the attacker will always aim to attack the easiest target. So you can have network attacks, Eclipse and DOS attacks that have been studied, and I studied myself for decades now in the blockchain environment. There are consensus attacks that translate over and impact DeFi, which sits on top of the blockchain consensus layer. There's smart contract bugs, which also affect DeFi security. And obviously, DeFi protocol composability attacks with flash loans, for instance, and excessive arbitrage between pools are potent attacks that have caused losses in the orders of hundreds of millions of US dollar in last years. There are bridge attacks, governance attacks, and so on. So the list goes on. And well, naturally, this is quite exciting for security researchers, but it's also a real challenge for DeFi users and companies to venture into this space if it's still rather dangerous at times to lose assets. So on a technical structure security, it's rather the problem is that it's sometimes is risk-free for profit. For an adversary to profit a DeFi exploit because of the technical structure of the blockchain systems. Right? So you do have transaction atomicity. So if your transaction fails, well, then the attacker is probably just losing a few coins on transaction fees. But this is technical security and this is economic security where if the incentive structure of the protocol is not aligned with that of the users, then there may be unintended profits at the expense of the protocol itself, or some users that were actually not anticipating those unintended losses, and hence they may call it a security attack. Sometimes it's not always clear what an attack is supposed to be, or what is the definition of an attack. But these are certainly, I guess, the high-level cornerstones of DeFi security. A particular example that's actually cross-layer are front-running attacks. So if you will, you can have here a blockchain block that's here in this particular block, for example, and you can have a miner that is including then a transaction later on, right, in this transaction order. So a miner is an entity that creates blocks or accumulates transactions in a block. And we have TV, which is a victim transaction that's pending on the network layer, so other people can actually observe it. And then an adversary can create an adversarial transaction 1 and 2 and front run the transaction. So here this is a front run transaction and this is a back run transaction. And this is the victim transaction, which is then squeezed in between the two adversarial transactions. And this is called a sandwich attack because the user here is being squeezed in between these two attacks. And this is a source of so-called minor extractable value. So it's a value. So the value here that can be extracted from the victim transaction is called MEV. We will go into more details later in the security lecture. But just for you to understand that there are these kind of games going on between the blockchain peer-to-peer layer and the DeFi application layer. So it's really a cross-security game. And obviously, there are significant dependencies and even systemic risks. So, for instance, what happens if the cryptocurrency market crashes by minus 30 or minus 40%, which did happen in the past? And these events, they propagate like shockwaves among DeFi, causing liquidations. Liquidations trigger more selling of the liquidated collateral, causing more further price declines, causing further liquidations, and these are then the leveraging spirals that we can observe. So DeFi is certainly not immune to these deleveraging spirals. They haven't been studied significantly so far. I mean, there are a few works maybe that look at deleveraging spirals, but this is certainly still an area where we need more data, we need more studies, more research to be done. The stock markets, they have circuit breakers, right, to stop losses. So if the S&P is going down 10%, I would suspect that that the circuit breakers probably hit already at about 7% or so minus. So there's certainly circuit breakers, and then people just stop trading. But DeFi has no circuit breaker as such. I mean, it's just a 24/7 system that's running on a worldwide basis. And so transaction fees on a blockchain can also spike at those times. So that's quite a danger again, because then you cannot top up your collateral, or you might get liquidated further. So it's really I mean, systemic risks in DeFi are quite intriguing, intriguing phenomenon to capture and to study. And in particular, if you're a researcher, I mean, you have all this data available to you, right? You have all the transactions, all the users, all the price and time data available. It just needs to be, this data needs to be crunched and made kind of human readable. So it's certainly super interesting to study systemic risks, and also to create simulations to understand this better. Privacy is certainly a risk that many share. Some are obviously less interested in their privacy, but financial privacy is certainly a difficult topic. And in DeFi in particular, because DeFi is mostly pseudonymous but not anonymous, there's no real privacy. So balances, transactions, timestamps, amounts are all public, and we can observe super wealthy DeFi accounts. So for example, if you look at this address here on DBank, you can beautifully say, well, there are $4 billion US. This account is estimated to earn about $300,000 US every day. You can see the entire transaction history. You can see the distribution of assets on various chains, such as Ethereum and BSC here. You can see the full breakdown of how many assets are in which token and in which DeFi platform. So you basically you can even follow the people, right? Here, there's a social network component. You can just follow them. They already have this address already has 90 followers. I expect there will be social networks actually emerging based on top of on DeFi due to its transparency, and probably some YouTubers that say follow my address, subscribe and like, etc. Right? So you can see how this is really being pushed to the edge of transparency. So thank you very much for listening. As with every new technology, there are a variety of risks that may cause financial losses. So as everything in this lecture, this is no financial advice, but you should always be careful with where you put your assets and how to manage them. DeFi privacy is another issue. You don't want your assets or your entire balances to always be tracked. So be careful and mindful of how you interact with which addresses and which wallets and which exchanges, where you send your address to, which websites you authorize your MetaMask or wallet to access. So it's not that simple. So stay alert.